Hey, Rick Elmendorf here, and we're going to be discussing VA IRRRLs today. So I put together a little presentation to kind of help us through some of the things there. And most importantly, I wanted to go over a worksheet that I developed specifically for VA IRRRLs. Now, a little warning, we're going to get a little bit technical, but don't worry about it. I'm going to explain everything, and just make sure you watch to the end. My CMO actually brought up I guess a list of the most searched terms with regards to VA IRRRLs. So I'm going to actually go through those today and give you my spin on it. I'll call it my not so typical guide to VA IRRRLs. An IRRRL stands for a VA rate reduction refinance loan. Yeah, there's 3 R's in there. Go figure. But anyway, let's go ahead and get started. Now, if I can get this thing to move forward there we go. All right. So this is going to be a how-to video on the VA IRRRL, but let's just discuss what is a VA IRRRL. This is the first thing that is actually searched for. What is a VA IRRRL? Well, IRRRL stands for VA. It's a VA loan, interest rate reduction refinance loan. So it's for refinances only, and an IRRRL is only for those loans that are currently VA loans. And basically, IRRRL just means they're giving you a break on all the documentation. There's no appraisals needed. Typically, there's no documents or financial questions. There's no qualifying issues. We'll get to some of that a little bit more, but basically it's a streamlined product that the VA offers as a benefit to those who currently have a VA loan. Okay, there's some qualifications in there, but I don't want to get too much in the weeds on that, but that's what an IRRRL is. Let's see. So the next thing that is searched is, what are the pros and cons of a VA IRRRL? All right, let's get this one done quick. Let's start with the cons. Yeah, there are none. Yeah, so let's just move on. No, in all seriousness, there's really no con to a VA IRRRL. But specifically what an IRRRL is meant to do, it's simply for reducing the interest rate. You can't use it for cash out. You can't use it for home improvements. The only thing you can use it for is for lowering your interest rate. And the VA has some criteria. You have to meet 3 criteria. We'll get into those qualifications in a second. And I'm blocking, I'm gonna move myself up here. So what is the maximum LTV or VA IRRRL, and what other qualifications are there? This is another highly searched topic. Now, probably being searched by loan officers, but whatever. Okay, so maximum LTV. Now this means loan to value. Basically what people are asking or wondering, or loan officers are asking, is based on the value of my home, do I have to worry about that if I'm trying to get a VA IRRRL? Like, what if my home is worth, or my loan amount is going to be is higher than what my home is worth? That would mean my loan to value of my house, LTV, is actually over 100%. Well, guess what? VA doesn't have a maximum LTV requirement. Some lenders will impose that because they don't want to be inheriting loans over 100% loan to value for various secondary reasons we won't get into here. But let's just, safe to say, VA's rule is there is no maximum loan to value, okay? The other thing is, what other qualifications? This is a widely misunderstood topic because there are no qualifications required on a VA IRRRL other than you meeting the 3 criteria. Well, A, you have to have a VA loan, but your 3 criteria are very simple. Number 1, you have to lower your interest rate by at least 0.5%. So if you're 3 1/4, you have to go down to at least 2.75. Simple. The next thing you have to worry about is my break-even point. So I have to make sure that the closing cost that I'm being assessed divided by the monthly savings is 36 months or less. I said there was 3, but there's actually a few more, and I can't remember off the top of my head. I should have probably prepared this, but I'm not like that kind of guy. I just kind of just wing it, right? But it's safe to say, as long as you meet these criteria for the VA IRRRL, you're going to be okay. And most lenders, they're kind of forced into meeting the requirements. So if you are offered an IRRRL and the loan officer knows what they're doing, then it's probably a pretty good deal, okay? So you meet the requirements that are set forth by the VA. All right. So this is another funny one that's researched. VA IRRRL 1.75. Now, I know why people are searching this. It's because the plethora of mail that people are getting about lower your rate to 1.75. Well, you know what I call that? Bait and switch. Yes, it is. There is such a thing, bait and switch. Is there a 1.75 interest rate today on, where are we right now? Let's look at my phone. For February 2021, yes, there is available a 1.75% interest rate. But the way lenders work is that you have a rate, which is typically your par interest rate, i.e. we'll call it no points. If you want a lower rate, the lender just doesn't give it to you. They make you pay for it. So you pay upfront money to get a lower than market interest rate. They call those discount points. Now, in order to get a 1.75 interest rate on a 30-year fixed, it's mucho discount points. Let's just put it that way. Now, it's an easier to get a 1.75 on a 15-year mortgage, but again, you're still going to be paying massive discount points and closing costs. I've done the numbers 1,000 times. The best rate on the board right now is 2.25. That pretty much is soup to nuts. 2.25 is the best rate. Cost, rate, buy down, all that stuff. 2.25 is the best interest rate. And you do the math, it makes 0 sense to buy the rate down further than 2.25. So let's just summarize it saying that most of the 1.75 offers you're getting in the mail are trash. You just throw them away. Give me a call instead. All right, number 5, and this is, we're gonna go into the worksheet. This is VA IRRRL worksheet. So again, I don't know if this is my compadres on the lending side trying to Google what a VA worksheet looks like to calculate the maximum VA loan amount, or if it's a consumer that's truly interested in a VA IRRRL worksheet. Well, I've actually created one. It's pretty cool, and let's go ahead and get into it. So the reason I designed the worksheet, man, I'm blocking myself again. Let's move over here now. Yeah, you know, fun editing this one, I'm sure. So the VA IRRRL worksheet, it's really designed for the end user to plug in the data and then just quickly see the benefits. So basically what I'm gonna have is I'm gonna have an input section, and I'll get in that in a second, but basically everything else will take care of itself. You just input your balance, your interest rate, obviously you have no mortgage insurance, and then your escrow payment, and it'll basically do the math for you. So let's go ahead and, let me go ahead and share my screen on the other piece of this, and I'll go into the production side of this. I'm gonna put myself over here. All right, so this is the VA IRRRL savings analysis worksheet. Really put your name in there, put your address, make sure it's in this format. It's important because in different states that I'm licensed in, some are tax exempt, meaning you don't have to pay the recording fee. See this recording fee, this is actually set up for Virginia. The state recording fees are kind of massive in Virginia, and you have to prepay them again. But this is an actual scenario of a client we just helped refinance. He was sitting at 3.625. We did a VA IRRRL down to 2.25, and he ended up saving $517.20 per month. And this is exactly what was going on. So now, when you fill out the form that I'm going to ask you to, in the description, there's going to be a link to go to the form. Go ahead and complete the form. We'll automatically send you this worksheet. And really all you're going to have to do is just complete this data over here. Once you've completed this data, it's going to fill out everything. So you put in your balance. That is your current balance on the first mortgage. If you have a second mortgage, don't worry about it. This is another kind of, maybe another topic for a video, but if you have a second mortgage, a lot of lenders freeze up and they say you can't do it, and you can't do a VA loan. That's absolutely false. You can have a second mortgage when you do a VA loan. So, but this is the balance of your first mortgage. Obviously, you're going to put in your interest rate. The interest rate helps calculate the payoff of your loan. Now, keep in mind, I'll get into that in a second. Your current principal and interest. So this is not your total monthly payment. You're just going to put in your principal and interest on your mortgage statement. You should see principal and interest broken out. And then of course, you're going to have your escrow payment. VA loans don't have mortgage insurance. So really all we're dealing with is the taxes and the insurance on the home. And by the way, just a note on that, if you have or plan on getting your VA disability and you happen to have a 100% disability rating, many counties in the country do not require you to pay taxes up to, I believe it's 1 acre of land, and then you obviously pay no taxes for your property, which is really cool. You save a lot of money in escrow and a lot of money on your payment. So I probably butchered that, but no taxes if you're 100% disabled in many parts of the country. So anyway, you put all this stuff in, and you have your current mortgage payment, total payment, and the worksheet will already do the math. It'll take all the stuff here. These are estimated closing costs, and these are estimated prepaid. So let's go into that in just a second. So you'll see it laid out here. Your closing costs, your total settlement charges are $6,140. Add that to your payoff interest. I'm going a little fast, a little technical, but just bear with me. So you have your settlement charges and you have your payoff interest. Payoff interest, basically, when you go off to pay off your mortgage, and people ask me this all the time, hey, Rick, why are you financing $318,900 when I only owe $311? You told me my closing costs are only $4,200. That's correct. However, to pay off your loan, there's actually another about $1,200 to $1,300 in back interest that you owe on that loan. So your principal balance is never your payoff. Secondly, your closing costs are not the only thing that get financed. You have to reset your escrow account. Now, I've estimated this, I think 2 or 3 months of escrows in here, which is pretty standard. You figure you have your current escrow balance over here, that's at your lender. We're gonna make a new one. Basically, they should wash out plus another month or two that we need, because you're gonna be technically skipping a payment. So in this scenario, if we were to originate this thing today, we would be looking to close this loan in about 2 weeks. Yes, I said that 2 weeks is what we're doing. We're running up, hopefully this video being seen a year from now, we'll still be doing it. But as of right now, we're doing a pilot. We have a team, a machine of people that are waiting to get these things done in about 2 weeks or so. And it's very minimal documentation. Again, on the VA IRRRL, there's not a lot I need. I need name, rank, serial code, social security number, and your address for the last couple of years. We don't verify anything. So you don't qualify. It's super, super simple. So we've made this a very quick, easy, and painless process. So, so I went through the closing costs. Closing costs are really just broken down by lender's fees. This is just standard lender fees, title company fees, and then recording. If your home was in Maryland, which is kind of cool, Maryland, North Carolina, South Carolina, some of these states do not have a state recording. You only get charged on the new money you borrow. As you can see here, if your home was in Maryland, the closing costs go way down, which is fantastic. Let's see, the prepaids. I also went into this escrows. Escrows, we're building the new escrow account. So that's going to offset with the current escrow balance you have, meaning you're just basically going to get a check back, or we're going to apply your existing escrow balance to the payoff. And then prepaid interest is interest based on the day that you close through the end of the month. Told you I was going to get a little technical here, but bear with me, I'm almost done. So your total prepaids, keep in mind, prepaids are not closing costs. Prepaids are not something that you pay to do this refinance. The closing costs are. These items are not, okay? But your total settlement charges are actually prepaids and closing costs, okay? Plus your interest, and that's where I get my new loan amount. So if you want this spreadsheet, I would be happy to give it to you. Head on over to loanwithrick.com, click on the refinance tab, and just fill out the form, and we will get something over to you right away.